A very good evening to one and all present here. In today's Q&A, we have with us our Chief Investment Officer, Mr. Sunil Damania, where he would answer all your queries regarding stock, sector and market related. If you have any queries, please drop it below in the chat box and the panelists will try answering all of them. Over to you, Mr. Sunil.
Hey, thanks a lot again and very warm welcome all of you. Market has been moving in no direction. In fact, if you look at last 1 year, the Indian equity market has gone nowhere. And this is despite India having among the best performing market in last 1 year. So that gives an idea what's happening. You would have seen your mutual fund portfolio, you would have seen your personal portfolio. I think it's going nowhere in last 1 year or so. And the reason has been very, very simple that one after another, things are coming out of surprise. And for Indian market, I think the biggest surprise came from the Adani Group episode, which came out of a blue and really hampered the sentiment. FIIs are on a continuous selling spree. They sold very heavily in the month of Jan. I have been informed even today, they have sold very heavily. And some reason they have been constant seller on the Indian equity market. So that's really making money little difficult as we speak. And what only the big consolation that we should take, despite they have been selling very heavily, even though market has not given positive returns, at the same time it's not given negative returns either. In other words, a market could withstand the heavy onslaught of selling from the FII's Adani episode and so on and so forth. And one of the reasons is very simple, that the fundamental story of the Indian market continues to remain extremely strong. And I'll showcase you some data point in my presentation before we open the floor for a question answer. But before that, let me just say that this webinar is only for a disclaimer purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be considered as an indicator for future returns. Now, if you look at it, there's one more request I have for everyone. Again, we'll pick up your question. Please don't put the question again and again. If I've already answered that question, please do not ask that question again, because it really irritates other, in terms of asking questions. And number three, the score of companies available on our website. Okay. The very fact that you are asking me a question, I think I would assume that you are asking my personal opinion. Sometimes my personal opinion may vary from Markets Mojo opinion, and hence, in case if I differ, it happens in some cases, not all cases. You have a choice to pick up, but don't write back to our customer care department. Sunil Damania said so and so, but score is so and so. So we are putting this disclaimer upfront. Now let's look at what has happened. India Inc. numbers, if you look at it, almost 2/3 of the India Inc. market cap companies declared numbers. The sales quarter on quarter up by 2.4%, Y on Y 19.1%, and net profit 15.3%, and Y on Y. So in other words, what the number clearly says that there is no gloom and doom. And what we saw GST collection, that's what I was referring to, the fundamental story. It continues to remain robust. And hence to, come to any meaningful conclusion, the market is, the fundamentals are weakening. Of course, in US, we all know that there is a less probability that there will be a recession in the US. And if that is so, one minute. Then if that is so, I think some of the companies which are relating to exports, they should do extremely well. So I think one fear that everyone has, and especially on IT stock front, if the US is not going to go through the soft or hard landing or no landing, whatever you call it, there will be problem. But right now it does give an indication that the thing doesn't look so bad as what was expecting. And I think no one now talks about recession in the US, and that's a happy news to be there. So I think that's one factor that should go. A lot of people are asking me questions about should they do bottom fishing in Adani Group companies. And I've taken this price from 24th Jan because 25th the market reacted to the Hindenburg report. till today, if you look at it, of course, some companies did see some rebound today extremely well. But despite that rebound, if you look at it, Adani total gas is down by 62%. I again repeat, this data is from 24 Jan 2023 till 7 Feb, that is till today, and Adani total gas is down by 62%. Adani Green 56%, Adani Transmission 55%, Adani Enterprise, which I have been informed has gone up today. I don't know how much it has gone up, but it did go up. Am I right today? And it's up by, still it's down by 48%. So what is Adani? Let me see what is Adani today. Oh God, no, I think I need to. Adani Enterprise was up by 15%, and yet it was still, despite today's up 15%, is down by 54.6%. So I think there is a heavy selling pressure, that, of course, and what we have observed that any group or any company, when they go down substantially, they do bounce back. That could be technical corrections or oversold or whatever maybe. But would this sustain? It looks a little doubtful. And Aswath Damodaran has come out with the report saying that, Adani Enterprise should be less than 1,000 rupees. And then he did mention about the momentum, and sometimes momentum remains above the fair value price or goes below that. So we don't know. But one good thing, or if you look at it, the name those bear Adani in the company name, they have fallen the most. And then where there is no Adani name like NDTV, Ambuja Cements or ACC, the fall has been less severe. Even though they have fallen, the fall has been less severe. So clearly, if you are thinking of doing bottom fishing, one of my relatives called up and also asked me, should I do bottom fishing? And my advice remains the same, whether it's for my relatives or for you people, because you are part of our extended family. My advice remains the same. Please do not do bottom fishing, because we do expect Adani Group share price to remain volatile. And retail investors don't have that ability to withstand the volatility. One thing which worries me is that this company normally, some of the group companies normally deals into upper circuit or lower circuit. Now, sometimes even if you wish to get out of the company, and if it's quoting at the lower circuit, it creates a problem. So my request to all of you is that please don't do bottom. This is my personal opinion. I would rather not make money. Why? Because the risk reward is definitely not in the favor of reward. Even though they've taken a huge beating, I wouldn't be comfortable buying in this. And so what I'm not comfortable, I would never recommend that. I have a simple philosophy. I would advise you only those things which, if I have this one, I will do it on my personal capacity. Then only that I'll advise you people. And since I will not do on my personal capacity, I will not advise. So even if you look at our IP also, which suggests most of the companies are under sale only. So my advice, do not, you may get tempted. Of course, a lot of brokers may ask you to do that. Please understand the risk. And once you understand the risk and still wish to go ahead, good luck to you. I am nobody to stop you from doing that. But do expect Adani Pack to remain extremely volatile, choppy based on the news flow. And news flow will keep coming in. Whatever the collateral damage has to happen will happen in next couple, it will get over by this week. And post that there will not be any collateral damage due to Adani Group companies. And hence the market should gain the momentum and should do reasonably well. In fact, I wrote a blog where I do expect market to bounce back very strongly, because last 1 year we have gone nowhere in terms of the indices, and that's been the case with I was looking at Morningstar category returns, and doesn't give a very healthy picture there either. Okay, so that clearly shows that it has been a little struggling time for most of the fund managers, and I don't blame them, because the market itself has been little choppy and little volatile. So that's on the Adani Pack. I'm preempting certain questions. I thought let me address with this. Now, one question that people keep asking me when I do review or when I meet people, said, is market is not trading at a valuation very, very rich Indian market. So what I've done, I've taken this data from economy survey, and the economy survey has taken this data from SEBI. So, both the sources are very, very reliable. And as per then, this all economy survey is available in public domain. So my request to all of you, if you want to do that, please search this. This table is available. Now, what this economy survey says that 5 years average of India Nifty 50 is at 27.4x. We are trading at 21.8. So are we trading at premium or are we trading at discount? We are trading at discount. Of course, we are trading at premium to some of the other world market or so, but we are trading at discount to our own parameters. And logically, we should be trading higher than the 5 years average. Why? Because growth in earnings, return on equity improving, deleverage balance sheet. So logically, we should be commanding. So I thought, let me give you this data so that you people understand that we are not trading at discount. And hence, one of the reason I strongly believe why market should do well, because of this data. Data speaks for itself. And what I observe in my life, fundamental has to reflect in the price sooner or later. What applies to the company also applies to the country. And if India's fundamentals are good, it has to reflect in the price and the appreciation. So I'm very strongly believe, if you remember when we did this Mojonomics, I did mention they do not bet against India. I'm happy to inform you that very recently, Anand Mahindra, he used on a social media as the same statement, they do not bet against India. And I strongly believe India's growth story is not here for 1 year, 2 years, or 3 years, at least for 1 decade, if not more than 1 decade. And if that is so, it should reflect in the market cap of India. I know sometimes it becomes a little frustrating for every one of us कि कितना वेट करने का परफॉर्मेंस ही नहीं है मार्केट में चल नहीं रहा है how long do we need to wait? Sometimes yes, that question does come, and the frustration is at the peak when the market is at the bottom. I again repeat, समझ लो मैं क्या बोलना चाहता हूँ. Frustration will be at the peak when the market is at the bottom, and that's what exactly. So when you see your frustration level increasing, remember we are very closer to the bottom, not at the closer to the top. Am I right? With this, I just very quickly I'll say we do have a very attractive subscription offer, 26,999 for 2 years plus additional 3 months. And very good, soon we are launching, I think most probably on Friday, the mutual fund transaction, which was a part of this package. So not only this offer, 26,999 itself is a 33% discount, but an additional 3 months you are getting. And remember, this offer is only for those who are attending our webinar. This link is not available on our website or anywhere else. So I'll request my colleague Adrian to please drop the link and let's open the floor for question answer.
Sunil, the first question is from Mr. H.V. Rag. Bharat Dynamics declared huge negative result today and its Mojo score dropped from 70 to 50. What is your advice on the share in your personal portfolio?
Sir, we will come back to you very soon. Yes, I did see the numbers. It has been announced. In fact, the number got announced during the market hours only. I did not get a chance to go through in great detail. We will go through the data in detail. But we are right, score has come down to 50. For some reason, if you have to move out, we will advise you to exit. If you are a paid member, you will get an alert from us, irrespective whether you are holding this company in a model portfolio or not. Why? Because it's also a stock of the month, Bharat Dynamics. So we'll come back to you, sir. Please have patience. It just got number declared. I need to still consume that data in great detail.
The next question is from Mr. Malik. Sir, good evening. What is the intrinsic value of a stock and how to derive it? Because the stocks across sectors and to be valued as per your website are very attractive at PB of 3 and some are expensive at PYB of 1.2.
So Malik sir, what we do, how do we derive the valuation so that, and since you have asked this question, it's a very good question that you asked. And I think since you have asked, I think it will clarify for others also who are attending this webinar. So we look at a return on equity of a company, and based on the return on equity, what should be the price to book value for that company, because we do the non-regression analysis there and we see that. We also look at it historically, what kind of price to book value this company was commanding when this was the ROE, and we try to match that. And then we look at dividend yield, then we look at PEG, price earning to growth, to arrive at the valuation of the company. So sometimes when you see price to book value of 3 having very attractive valuation, you should also look at the ROE. Chances are very high that that company would be enjoying a higher return on equity. The same way, sometimes the price to book value is less, then the ROE has to be less, and that's the reason why you should. So it's not very simple formula. It's not a very what we call unidimensional kind of a formula. It's a multi-dimensional formula, okay, where we look at a lot of permutations and combination to arrive at this. But I think simple method, it's like this. Someone would say, a PE 15, why is it showing expensive? And PE of 60, why it's showing attractive? It could be because historically there's a growth in that company. That's why it could be. So I hope that's so. What I told you, price to book value of 3 normally should have higher ROE. If that is not so, please bring it up. And again, please pick up Malik Sir question again in case if he says what I suggested is not true between the PB of 1.2 and PB of 3.
Yeah. The next question is from Mr. VINEET KHAIRA. I hold Pfizer, which is 5% of my overall portfolio, and it's down 21%, resulting in 25,000 loss. Should I average, hold, or sell? Also, today we saw amazing spike yesterday on P&G Health Ltd. Does this mean one can start accumulating this stock, and can I replace Pfizer with P&G Health?
I wish, sir, see, this kind of a one-day movement should never be the reason for you to get into or get out of any company. The Pfizer, according to us, is just changed from sale to hold. Is a score of 50. My advice would be, at this point of time, if you are a Mojo stock, Mojo subscriber, please get out of Pfizer or use our feature, which will help you to move from one Pfizer to another company. As far as P&G Health is concerned, you are right, it did move up. But let me see what is our P&G Hygiene and Health. It's again exit, it's sell in our system. My advice would be to move away from this.
The next question is from Mr. Ankur. What is your personal take on Vodafone Idea for 2 to 3 years horizon, considering government is converting 33% debt into equity?
So I think I did mention when we had this what was the frank talk or something, a frank confession that I did with Mohit, and I did mention that Vodafone Idea could be a higher risk, higher return kind of a strategy. So if someone has an ability to withstand the volatility, withstand the underperformance for a longer period of time, you can basically go and buy Vodafone Idea. You are right, Government of India did acquire the stake at 10 rupees, and yesterday, based on that news, scrip did move up. Today gave up some of the gain. Government has gone on the record saying that they want minimum 3 players in the country. And Vodafone Idea will continue to perform well. So, if you can afford to take higher risk, put some portion. Don't go a lot over the board on investing on Vodafone Idea. Maybe you can put some money on Vodafone Idea. Remember, I must tell you that I must put a disclaimer. As per Markets Mojo website, the score of the company is strong sale with 9. So, don't put too much money in case if you wish to go with my advice, and be ready mentally that this company can have extremely volatile price movement.
The next question is from Mr. VINEET K. What to expect from the RBI meeting, and what will be the impact on deposit rates? Lastly, can you tell how safe is Jana Small Finance Bank as I plan to open an RD in this bank since they have offer the highest interest rate.
So, sir, I don't have any opinion about Jana Small Finance Bank. So, my request would be do your due diligence. I don't get too much comfort level with, see, when you go to debt market, your objective, so today there are many other, banks offering very good rate of interest. So, go with public sector bank, go with some of the large private sector bank. So, that's what, but I don't have any view, so I would not be able to say whether you should go or not, Jana. 25 bips rate hike from the RBI, that's what we predicted long back. And that should happen, that's what my sense is. What will be the impact on deposit? Maybe further 10 bips rate hike that can happen in deposit rate. But remember, the rate hike cycle is about to come to an end. So whatever you used to lock in, please lock in now. In fact, today we had one couple coming down to our office and I advised something very similar, that please lock in if you are a senior citizen. Now government has increased the senior citizen limit, maybe that you can explore, which offers you 8% on that in case we wish to move to that FD rate or kind of stuff. And anything up to Rule X, there is one scheme has come out that more detail will come out only for the female members of the family. Up to 2 lakhs you can invest and you can get 7.5% kind of an interest. So that's what going to happen. So my advice would be maximum 10 bips rate hike on the deposit rates, 25 bips rate hike from the RBI. And Jana, I would not put my personal money, but I don't know much about. See, I will not put because I don't know much about it. Okay, it's not that I'm not saying that bank is bad or something, because I don't want to create unnecessary panic also. Otherwise, people will go out and panic and start withdrawing. I don't know much. So when you don't know what you do something which you know, where you can put. So maybe PSU banks or large corporate. See, I may forego maybe 100 bips rate interest rate on my FD, but that's fine. But at least I can have a peaceful sleep in the night. So that's what I would do, and that's what exactly I would advise you, Vineet ji, doing something very similar.
The next question is from Mr. Harish. Hello Sunilji, after result, which paper company is good? JK paper, West Coast paper or Andhrapaper?
My advice would be, sir, go with the score of the company, because see, that is very difficult to pick and choose. See, all three have come out with a very good set of numbers. Andhrapaper, the height seen, they came out with a very good set of numbers. The profit, as I can see, moved up from 37 crore to 170 crore. So that's a substantial 356 jump in the profitability. Let me see JK paper. And JK paper, they came out with the numbers. Let me see. JK paper also came out with the number 150 crore become 329 crore. So that's again very good growth. And let me see West Coast. And see, some of these companies have started showing some life now. After underperforming for some time, they are showing some kind of an upward trend. West Coast paper has not yet come out with the numbers. So wait for that. It's tomorrow. So not tomorrow. It's 10th Feb that they are going to declare the numbers. So wait for. But going by the trend, what West Coast has, or what JK paper has done, Andhra paper has done, probability is very high that even West Coast should come out with a very good set of numbers. Just go with the score of the company. Higher the score, better the company. That's a simple logic. So if you are confused, wait for West Coast paper numbers to come out, because their score will undergo change. And post 10th, decide which company you want to buy out of 3.
The next question is from Ms. LAKHMI CHAND LALWANI. Hi Sunil Sir, I have a query between KPIT Tech and LTTS. Currently I am holding LTTS with a 18% loss. So should I average it, or should I do a fresh buy of KPIT Tech or average LTTS? Also want to know about JK paper. After result it fell, but can we do more investment in it?
So JK paper, answer is yes, you can, because we have not closed the call yet. It's also our stock of the month. We believe that this company should do well. Very sound management, very good management. Valuations are very, very attractive. And yes, so you can look at it that. As far as, and I think, sir, I think you have raised some query about this InfinHub also. I'm looking into it, so please bear with me. I need some more data, so I'll come back to you. KPIT and LTTS, I think right now our score says KPIT. So I would suggest you to go with KPIT. LTTS you continue to hold. Don't do average. See, that company also has a very bright future, to be very frank with you, because it was also, I recommend as a part of a Muratba is not this Diwali, but one before previous Diwali. And I believe that companies should do reasonably well going forward. But my request, since our score also says KPIT highest compared to LTTS, please go ahead with KPIT as I speak to you.
The next question is from Mr. ALOK. What are your views on Reliance Industries as it is currently hovering at the same price like it was in October 2022?
So I think, sir, a lot of companies, that's not only applied to the Reliance, but there are many other companies that's where, even as I told you, last 1 year, if you look at the market, is almost at the same level what it was last year, February 2022. So if you can see, Nifty is up by only 2.9%, Mid-Cap is only 0.5%, and BSE find it 0.34%. So it's been very little challenging for everyone, and that's what is happening with Reliance also. Now, Reliance, I think the story is more of a value unlocking of its retail, of its telecom, and there is a good hope that that can happen. There are two ways that can happen. One is that Reliance Jio go public, or Reliance Public can go public. Or, if you remember when these two brothers separated, Anil Bhai and Mukesh Bhai, they gave shares of various companies to the shareholders of Reliance Industries, something that can also happen. So right now it's a sale in our system with a score of 44 Reliance Industries. But if you are not in a hurry, maybe you can continue to hold this company, Reliance Industries, only on the hope that there will be a value unlocking that can happen. And once that happens, I think companies should do reasonably well.
Sunil, there are a lot of clients asking for any hint regarding the stock of the month for Feb.
So we are looking at 3 companies as a stock of the month. I'm not going to give you any hint. I know once Mohit gave some hint to some of you, but I'm not going to. We will select one and we'll come back to you which is that. We are going to have a webinar on 9th, that is on Thursday, and we'll finalize most probably tomorrow as a stock of the month, and then we'll start making report and PPT and so on and so forth. So I'm going through all 3 companies con call, reading the annual report, going through the presentation, what media interaction they've given, what kind of guidance they've given. And once we freeze that, we will make it. So, but I'm afraid I will not be able to give any hint because it will be unfair on my part to give you, we have thousands of investors across the world and not all are able to attend the webinar. The moment I give some hint, it would be little unfair to the others, am I right? We should disseminate the information same time to everyone, so that there cannot be any price arbitrage one investor should get over the other. And that's the reason, even if I would have decided, of course not decided yet because I'm still looking at and reading it, I'll read today, again tomorrow I need to spend a lot of time understanding the business model. And once we decide that, we'll release on 9th. So please, sir, I know you people are a little excited, but please hold on your excitement.
The next question is from Ms. MEENARAJ. Please comment on the following scrips which have fallen considerably. 1. Best AgroLife, 31%. Second, Vista Lab, which is minus 31.8%. Newcastle, 22.2%. Should we hold or sell, or should we move on with it?
So go with the score of the all 3 companies and decide what needs to be done, whether Best AgroLife or Vista Lab. Vimta Lab should be. I don't think there's a company called Vista Lab, when I may be wrong, and Newcastle. So just look at the score and take a call. That's what my advice would be. Newcastle, I don't know which company is this. Newcastle, I'm not, I don't know which company you're referring to. I'm not really sure about the Newcastle. Is it a SME listed or something? I'm not aware. The Best AgroLife, Vimta Labs, I would assume, but Newcastle, I don't know which company is that.
The next question is from Mr. Anirban. M&M Financial Services, the December quarter financial trend came as negative, but the stock seems hyper bullish even after result publish and updation in Mojo score. Any feedback on this?
So, if you look at it, our CFT score For the company has basically has come down. Okay, it was 5, it came down to now -3. So yes, but the score right now of M&M, which takes into consideration quality, valuation, recent quarterly financial performance, and technical, is 67. So my suggestion would be, please continue to hold. See, remember, someone other day also asked me, my customer care department asked me, we don't take view on on company purely based on CFT score. Our score is a function of all 4 dots, and we combine all 4 dots to suggest you what action you need to be taking, whether you should be buying, you should continue to hold, or you should get out of that. Am I right? So please look at the score. Today the score is very closer to buy, but the score of 67, please continue to hold.
The next question is from Mr. Srinivas. Sir, government planning selling its stake in ITC. Should one exit or average at lower price? Secondly, there is a sharp decline in Godfrey Phillips. Your views on this?
So government want to meet the disinvestment target, am I right? And they might do the stake that they're holding through this one. If that happens, I think the commentary from the management is good. The companies came out with a good set of numbers. Should it go down? I doubt very much. Okay, and hence we continue to remain ITC. You should. So it's a strong buy in our system as we speak, and I think if you already bought it, please continue to hold. That's what my advice would be. As far as Godfrey Phillips is concerned, I think see, you people need to understand. Sometimes the company goes up very fast, and once they go up, they need to take a breather before they start having a next round of price upward movement. And then something similar has happened with the Godfrey Phillips also. My advice would be please continue to hold. Even it's a Mojo stock, but I would suggest to both ITC as well as Godfrey Phillips, please continue to hold. Do not get out in a rush in case if you're holding this company in your Mojo Infinity portfolio or model portfolio, we will suggest you when to exit.
The next question is from Mr. Rohan Sharma. So what's your view on Ms. Bector Food Specialty Limited and the FMCG sector in general?
So I think Mrs. Bector is our Mojo stock. Their numbers are going to come out in next couple of days. My request would be please hold on and then take a call. We all know what numbers, 7 Feb. So today only they came out with the numbers, okay? Let me see whether our numbers are updated or not. For December, they came out with a very good set of numbers. And I was about to say that what numbers Britannia came out with was excellent numbers. And something similar is also reflecting with Mrs. Bector. So please continue to hold. The numbers are good.
The next question is from Ms. Meenakshi. Dear Sunil, is it a good time to buy an average Best Agro?
Is it good? Buy an average? No. See, normally I wouldn't recommend for the very simple reason because it's a falling knife. And if for some reason if the fall from high get triggered, then you would bought recently and we are asking you to exit in some time. So my advice would be no. If you are holding in your personal portfolio or in a model portfolio or Mojo Infinity, we will tell you when to exit. Right now, don't try to do averaging out.
The next question is from Mr. Prasad. Seeing the recent comeback by Adani stock, do you still recommend to stay away from them, or we can try investing around 10% of our total capital into a bunch of Adani stocks?
So Prasad ji, I will advise what I would do, and then you take a call. I don't have that kind of a risk appetite to venture out that, because when there's so much volatility, you don't know what can happen. So I would not do that, and I would recommend same to you. It's up to you. I did put one slide in beginning of this webinar how much they've fallen, and yet I wouldn't recommend to do bottom fishing. The choice is yours, whether you want to put 10%, 5%, 1% of your total. It's going to remain volatile, and I have seen that sometimes investors, they do say, no, I can digest volatility, but in real life they are not able to digest volatility, and then either they will do more of averaging, putting more money into the same company, or they will book substantial losses. And sir, ज़रूरत क्या है? You know, I know everyone wants to make money quickly, but that's not the right approach, am I right? Those who think they can make money very quickly are the one who basically lose money very quickly. So अच्छी क्वालिटी कंपनी मिल रही है, अच्छे भाव पे बहुत सारा मिल रहा है माल, उसमें इन्वेस्ट करो ना सर. Why you want to be go and play on momentum play? Unless you have some story or some insights that this Adani Group companies are going to go up only, then please go ahead and buy. But if you don't have that kind of insight, my answer would be to stay away.
The next question is from Ms. Ladda. Can you please comment on Tube investment prospect?
So company came out with the numbers, not so great numbers, I must tell you that also. The company did mention that there has been little delay in terms of launching their electrical vehicle because of Government of India coming out with the change in the battery norms, and that did impact them. They want to do capex, and they are going on the capex. The CG Power is doing reasonably well, this is Tube Investment is a holding company, and the optical lens, they have said that they are going to start exporting also to, I think, South Korea and Japan, if my memory serves me right. So overall, I think it's a hold in our system. I would suggest you to hold at this point of time.
The next question is from Mr. Vijay. Yesterday you mentioned about the art of exiting. Can you do a webinar or enlighten us on art of exiting and how to improve this skill?
To Vijay ji, I did almost 6-7 times this webinar on art of exiting. What I will do, just my request, Vijay ji is asking for that. How many of you are wanted? Just please say yes or no. And I'll request again to just see where does the trend is. If you want me, I can definitely do that webinar. But to summarize, I must tell you that I have seen only those investors who can create wealth from equity market, who not only knows when to enter, but also knows when to exit. If you don't exit, so I happen to tell you, on this Sunday, last Sunday, we had a small event in our society, banquet hall, meet and greet kind of stuff. And I happened to meet one gentleman who have been in a sales and marketing for many years, very renowned personality, written couple of business books, among the best performing books. Okay. And he asked me, he said, Sunil, मेरे पास HDFC Bank के shares पड़े हुए हैं. And I told him that, you must also learn, because he said, मेरे पास बहुत साल से पड़े हैं. Well, see, I do understand that you have your purchase costs are very less. That doesn't mean that you should continue to, you have to reassess the situation and you have to understand the art of exit. Otherwise, क्या होगा? The script will do well, script will underperform, and when you look at over a longer period of time, you have not made any meaningful gain in that particular company. And that's what going to define your returns from the, of course, it is basically semi-data to say so. It has enough wealth which he can sustain even without HDFC Bank. I know that also. But the point I wish to say is that if you really wish to create wealth, then you need to be as sharp as Warren Buffett. Because Warren Buffett knows when to enter and when to exit. He has really mastered that art. Okay? And if you look at across the world, only those fund managers who could create wealth, who have leave their human emotions aside, when the new data coming in, they accepted the new data coming in and decided to exit from the stock. And that's going to define. I still know how many investors continue to hold Suzlon in their portfolio. Many investors continue to hold Reliance Communications, Reliance Power in their portfolio. I know many investors continue to hold Manpasand Beverages, DHFL, PC Jewelers, Wakrangi, and so on and so forth. This company did grow up. They did move up very well. They did not know when to exit. And they're paying a heavy price. So I'll give you a classical example. Okay, the reason I'm giving you this classic example, not to this one. So when this Sika case was going on, you know that Sika had some some concerns about the corporate governance, the kind of price he paid to acquire one of the company, and so on and so forth. And when I listened to I was holding Infosys in my personal portfolio for quite some time. And when I listened to his explanation, I wasn't very convinced about what he was talking about. And I decided to move out of that company because I thought I made a good money. Time for me to exit. And my reason to exit was that I had a very strong reason why. What I did, I invested that proceed in one of the chemical companies. Okay. Because I thought this company will do better as compared to the Infosys. And this is, I'm talking about, Sikka, when was that, maybe I joined, so this is when I was in a previous organization. So in Markets Mojo, I have spent almost 4 years or so. So more than 4 years. The script that I invested is a chemical company, I must tell you that also, has gone up almost 6-7 times. Infosys is not done. So I lock in the profit in Infosys. I reinvested that profit to another company, and from that profit it's up by 6-7 times. So on Infosys, if you look at my, assume that it was 100 rupees, there's investment I made, which I made an exit at 3x, the 300 rupees pay. Infosys, the 300 rupees have become 2,000, my 100 have become 2,100. And that's why I say keep of art of exiting. And sometimes when I am not able to exit some companies, I do ask myself what went wrong, why I did not exit at the right price. And I do a lot of research on that just to ensure that I improve further on my art of exit. So I think art of exit very. How many people again have said yes and how many people say no?
There are around 50 clients who have said yes and around 10 clients who said no.
So I think majority of you want me to do, I'll definitely do that. Just remind me again that we need to schedule this art of exiting maybe next week or one after that, but we'll definitely do that.
The next question is from Mr. Shyam Sundar. I understand that you don't suggest buy and hold strategy and any target price. I also know that your actual exit date of stock from portfolio may be different. I looked at your Mojo stock list. As per that, for 51% stocks, holding period is less than 3 months, and for 76% of stocks, the holding period is less than 6 months. Whereas you use 1 year duration to determine technical trend, if for whatever reason you are exiting 75% stocks within 6 months, then why look at 1 year price trend? Is this a contradiction or am I missing something? Can you please explain?
So, Shyam Sundarji, first thing, what you are looking at is a Mojo stock list. Please tell me, sir, I don't know whether you're a Mojo Infinite customer or not, or your model portfolio you have. How many exit we have suggested you in last 3 months? See, again I repeat, and Shyam Sundarji, I believe you are attending many of our webinars because I keep seeing your name very often in the question answer session. And if you look at it, I've explained that when a company ceases to be a Mojo stock does not mean that company is an exit or you have to get out of that company. You don't have to sell that company. It just means that you are not supposed to buy more of the same company. And if you're holding that company in your model portfolio or Infinity, we will suggest you when to exit from that. Am I right? And as you all know now that we have decoupled our Mojo score and pass score that we use for Mojo Infinity. So don't get too much perturbed about the entry, and of course it has gone up. I must admit that. I'm not disputing it. And we are working on to reduce that the churn that's happening in the Mojo stock. But having said that, the stocks are not exit from the portfolio. It just means that you are not supposed to buy more of the same company. So I hope, Shyam Sundarji, you got that clarity. Not only you, but I think those who are attending this webinar and had similar doubt, they also got this clarification.
The next question is from Mr. Santosh. Divi's Lab, should I hold or should I sell?
Sir, if you remember, we requested you people with folded hands. It was our stock of the month. We lock in almost 30-35% profit in that, and we ask you to get out. That was somewhere in November 2021 or so. एक साल से ऊपर हो गया. Why? Because if you read our reasoning there, we did expect companies' margins to come under pressure, and the rest is history. So it's a very strong management, very well-run company. But if the company is not going to perform, I think people will not be willing to pay that kind of a premium, because it was commanding a very super rich premium, right? This company. Now, if you look at it, that's why I said art of exit. Someone asked me that right now, that's an art of exit. We recommended by Divi's Lab, we lock in the profits. And if you look at last 1 year, can you see my data here, Jason? Adrian, can I request?
Yeah.
If you look at it, just make it, just just show my screen only, don't show me, okay? 34% 1 year decline, 2 year 28% decline, 3 year 31.72 versus 46.53. What does this indicate? कि आपने exit नहीं किया, so you have underperformed for 3 years period also. My advice, sir, it's not too late. Please move out of Divi's Lab. It will continue to underperform. Something similar we did with Laurus Lab, if you remember, and a lot of people, both for Laurus Lab and for this one. Why? Because when we advise exit, the next month or within 15 days, I think ET gave an award as the best emerging company. And look at the data. 37.51% decline. We asked you to book profit, and then it's down by 37%, 38%. So art of exit. Tata Consumer Product, if you remember, we asked you to lock in profits. Why? Because we realized this company's management may not be able to create wealth for the investors, and we exited that. So Divi's Lab, answer is please move out. But again, this re-emphasizes on the point of art of exit. We did with Asian Paints, if you remember that. Somewhere in April 2021 or so, if my memory serves me right or something. And we had a very big debate on that. Why should a company that we should get out of? Because the company has done extremely well. So if that is so, and this company has created a lot of wealth, which rightly so. There was no reason why someone should have basically got out of that company. But our IP suggested this company may not do well. And if you look at it, can I request again to, I've taken 1st April, I can't recollect which date was there. So just from 1st April, Asian Paint is up by only 2021, almost 2 years, versus the Sensex, which is up by 20%. Clearly underperforming. And that's defined art of exit.
The next question is from Mr. Vineet. Why are there no Mojo recommendation on microcap?
No, sir, there are recommended. We do have 2 Mojo stocks in microcap, from microcap. So why do you think, why are you saying so? I don't know, sir. Are you a paid member, sir? If you are a paid member, you should definitely be able to see to microcap as a part of Mojo stock.
The next question is from Mr. Naveen. Good evening, sir. I want to know that I'm a Mojo professional subscriber. If I'll go with Mojo 10 lakh service, then how will the fee be decided? Can you please confirm on that?
The fee would be what? 2%? Kitna hai, sir?
1.25% every 6 months.
1.25% every 6 months you are supposed to pay. So if you are going with 10 lakhs, 10 lakhs ka 1.25 is 12,500 plus GST. That would be the fees that you need to pay.
The next question
that
is
rebate I think you are asking for Mojo Professional is no longer available now. It was available till certain period. It's no longer available. So those who are already getting it, they will continue to get it. There is no change in that. But the new, it will not be possible.
The next question is from Mr. Sandeep. So what is the scope for Indian rupee to replace dollar in international trading, considering the UPI being adopted by other nations? Can you please share your...
No, Sandeep ji. In fact, this question has come in the past also, and I said probability is 0.0001%. I again repeat, probability is 0.0001%. And UPI accepting is no, it's like your MasterCard and Visa card. it gets accepted in the dollar also, and dirham also, and Australian currency also, and UK and pound also. That doesn't change anything. So UPI is a technology. That's it. Nothing. It's not that people are going to make payment in rupee only or in this one. You can put in any currency. You can do that. That's the thing. It's just a platform. So 0.00001%.
Yeah. The next question is from Mr. Solanki. I have purchased Mojo Professional membership 20 days back. Is it good to invest only in the top 1% stock?
It's not a bad idea, Solanki ji. You can do that. But remember that our top 10 also may have some higher to the one particular sector or higher allocation to particular market cap. So my request to you is that, sir, please understand your risk appetite. If you are more aggressive investors, then you can go for higher of a mid and small cap. And if you are not, so even if our top 10 has a higher small and mid cap, you should not be. Why? Because your risk appetite is little low. Am I right? But it may not be a bad strategy to invest in top 1%. And we, as a thumb rule, don't invest more than 10% in one company and don't take more than 30% exposure to one particular sector. As long as you play within that limit, you should be fine, Solanki ji.
The next question is from Mr. Ram. Is there any sectoral pick or a stock pick for the next 3 to 5 year time horizon?
Ramji, sir, we have seen this sector rotation, company rotation very often. Am I right? So my request would be, why do you have a 3 to 5 horizon for company or stock? शादी करना है क्या उससे आपको? नहीं ना, तो just we did mention that IT should do well from October 2022. It is doing well, but we may change our view based on the new data point. See, our problem is that now we are all fixated in our mind. कोई नया data आता है ना, we don't want to accept that new data, and we are all victim of recency bias. A sector that did extremely well, we believe that sector will continue to do well even going forward. मत रखो सर 3-5 साल का कोई horizon. टुडे जो अच्छा लग रहा है ले लो उसको, एंड द मोमेंट द डेटा अंडरगोस चेंज, you have to change your view. You please change your view based on the new data, because you have to respect the data. You can't be so rigid and say नहीं I will basically, मैंने अभी हाँ बोल दिया, we are not सलमान खान, am I right? कि एक बार मैंने बोल दिया तो अपने आप की भी kind of stuff, am I right? So we don't have to, you have to respect the data. The new data point coming in, see, as I told you, divis left, we were bullish. That's why we can't stock of the month. And we did change our view when the new data point coming in, am I right? There is no harm in doing that. We did with that Web Global, if you remember that. We did with Laurus Lab. We did with Lux Industries. So that's the way. Like IT, we were extremely bullish on, if you remember that. And we changed our view on IT in first week of January 2022. We did mention that IT will not outperform now. And we changed our opinion in October 2022. So because the new data point coming in. So that's the way it works, sir.
The next question, basically, Sunil, there are a lot of attendees who are asking these questions on your comments on result of Excelia solution. Should we continue to hold or exit the stock, and share your views on the same?
Please continue to hold. As I told you, it continues to remain in our master list. Remember, if you are a paid member, sir, we will tell you when to exit from Excelia. You don't have to worry about it. Please continue to hold Excelia.
The next question is from Mr. Rajesh. My portfolio is having more than 50% of sector stocks since last 1 month, which is against your conventional norm of sector exposure. Shall appreciate if you can look into it.
So Rajesh ji, if you are referring to the Mojo Infinity strategy, Infinity we can have even 100% in one particular sector. But that's the way the nature of the product is. That's why we call it a high risk, high return. Nothing to worry at all about that. I was referring to someone 10%, 30% because he's doing on his own. And that's why that precaution is required. As far as Infinity is concerned, in fact in Infinity we do have 60% one small cap in Soul actually. So it's a part and parcel of our IP only, nothing to worry at all. Because it's managed by us. As an individual investor, if you are managing, then the threshold you need to maintain. That's what we are suggesting.
Sunil, we are done with the Q&A.
So, I know some of you people are getting tempted to buy Adani Group stocks. Be cautious, apply abundant precautions when you want to deal with that. My advice would be don't do bottom fishing. We do believe that market is poised for a big rebound. It can happen soon. How soon? It's very difficult to say. It should happen soon because economic growth story of India continues to remain robust. Don't get frustrated. That's what my request to all of you. With this, thanks a lot everyone taking time out and attending this webinar. Thanks a lot Edged for hosting this webinar. Over to you.
Thank you everyone for attending this event. We have a webinar scheduled at 7 PM on 9th Feb with Sunil, where he'll disclose the stock of the month and also share the reason why he picked up this stock. Please do attend the upcoming webinar as well. Thank you and goodbye.